Hey everyone, in this video we're going to be talking about putting Bitcoin on your balance sheet. Now whether you're a CEO, a CFO, or a corporate treasurer at a large multinational corporation, or you're the owner of a small business or a private company, knowing what Bitcoin can do for your balance sheet is really important, as a lot of companies like MicroStrategy, Tesla, and even Square have started to add Bitcoin to their balance sheet to protect themselves from inflation. Now this video in particular is focused on Canadian businesses, but a lot of the rules and things I'm about to talk about here can also apply to US and international businesses as well. This video has also been generously sponsored by the amazing people over at BitBuy, who run one of Canada's largest cryptocurrency exchanges. And they're uniquely positioned to offer businesses Bitcoin, and they're the only exchange in the country that actually one-for-one insures every Bitcoin that you buy on their platform and protects it with cold storage. Now, if you are a CFO or a founder or just an owner of a business, you're also going to want to stay tuned because we're going to be giving away $500 of free Bitcoin so that you can kind of start your journey into the world of adding Bitcoin to your balance sheet. Now, the big question that you've probably already asked yourself, or you should be asking yourself by the time this video rolls, is why protect the balance sheet? You're a profitable company, you have cash equivalents, you're racking in the profit, and maybe you're distributing it to shareholders or you're just collecting it on top for yourself. But if you are a company that has a lot of cash on hand, it can often become a liability in the form of inflation. And I don't need to go over the whole concept of inflation. If you run a business, you know exactly what I'm talking about over the last few years. But when it comes to things even as simple as lumber and oil, you have these assets that are so integral to running day-to-day operations in a business that have gone up 100 to 150% in just 1 year. Now, if you do have a lot of cash in your business, it doesn't make much sense to keep it there for years and years. You're losing buying power every year through inflation, which of course the government will tell you is 2 to 4%, but if you're in the business world, you know is a lot closer to 10 to 20% per year. And having different types of cash equivalents or things to place it in is a really good way of protecting your purchasing power for that cash for multiple months or even years. Now, traditionally, a lot of companies have put these things into things like bonds, protection where you'll get 1 to 3% yield in a year, or things like gold, which are kind of classical hedges to inflation, a commodity that kind of appreciates as there's more dollars pumped into the system. There's also the opportunity, if you're a growth company, to buy another company that's producing more cash flow. You can distribute that cash to shareholders in the form of dividends, or you can do things like share buybacks as well. There's a whole multitude of options of what to do with excess cash on your balance sheet. But again, like we're going to discuss in this video, one of the most emerging and up and coming and compelling ones is Bitcoin. Now, a lot of corporate treasurers might feel a little bit concerned just hearing the word Bitcoin, because all you might think about is this speculative asset that doesn't have any intrinsic value. It doesn't produce cash flow of any sort. It's not like a bond backed by the government. But what Bitcoin does have is 12 years of history behind it. The largest computing network on Earth is putting tons and tons of resources into Bitcoin to protect the network from hackers, double spending, and all sorts of things that could compromise a digital asset. And if you do look at the 12-year history of Bitcoin, on average, it is appreciated 150% per year, even including those downdraft years where maybe things get a little bit volatile and the asset might drop 60 to 70%. In the long term, the trajectory of Bitcoin is up, and if you put even just a 1 to 2% allocation in it, it can provide up to 5 to 25 basis points of capital protection on your balance sheet. One of the best ways to kind of think about Bitcoin is to compare it to gold. If gold is something that you've invested in or you understand the investment thesis for, Bitcoin is very similar. Now, while it's not a shiny rock that you can grab and hold, it has a lot of other properties that make it a much better store of value than gold. One of them being that it's a highly liquid market. Compared to gold certificates or physical gold, you can move and transfer Bitcoin extremely fast and at large quantities, which means for a company like Tesla, which recently bought about $1 billion worth, they were able to liquidate $200 million worth as sort of a liquidity test without even shaking the market a little bit. So if you're a large corporation and you have millions or even billions of dollars of cash, which if you're watching this video, thanks for doing that, you're going to be able to buy Bitcoin for your balance sheet, and rest assured that you'll be able to move in and out of it pretty quickly without disrupting any sort of market or running into a liquidity problem. For businesses, it can be really tricky to find these store of value assets because a lot of them will be maybe physical in nature or just hard to move in and out of if you need to for liquidity purposes. A lot of businesses invest in real estate because, well, if you're in Canada, the real estate market here is rapidly appreciating. But commercial real estate, we know, is in a bit of a turbulent time due to the coronavirus pandemic and people deciding to work from home. And gold is, well, gold. You can own gold certificates or you can have physical gold, but again, unlike Bitcoin, it's not very physically divisible or easy to store. You're gonna have to trust a third party to preserve your gold, and if you're in a joint partnership or so, it can be a little bit tricky to kind of allocate the protection of that asset as well. You can also do stock buybacks, but for what I imagine are a majority of the companies watching this video, you might be private and this won't be an option for you either. But unlike those assets, Bitcoin overcomes a lot of these challenges. And again, we're gonna dive into how Bitcoin can actually be fully insured if you purchase it through BitBuy. So let's talk about companies that should have Bitcoin on their balance sheet. And for me, there's a couple check marks for this, but one of the most important ones is that you have consistent earnings and cash flow coming into your business. If you have a lot of very expensive debt, I don't think Bitcoin is a good choice for you necessarily. But if you have cheap and kind of floating debt that you're able to finance at very low rates, or you're just a profitable company in general and you're able to kind of have a balance sheet of excess cash, then of course, I think Bitcoin is a great alternative. This also means that you might be a company in a lower growth environment, maybe under 100% a year. If you're in consumer packaged goods, or maybe you're running a service, or you're running some sort of thing like a restaurant, you're not going to be growing at such a massive compounding rate, where other companies that do have this immense growth, like technology companies, might be looking to put their cash to work in things like acquisitions and just scaling up massively in general. I think Bitcoin is also important for funds and fund managers. Just having a 1 to 2% allocation can again hedge a lot of your other assets on the balance sheet, which might be commodities or stocks or bonds. Companies that are cyclical in nature and companies that are very reliant on a specific type of asset as well, like lumber if you're a construction company, or oil if you're an airliner, could also benefit greatly from adding Bitcoin to your balance sheet, as it'll help you protect from the wild swings in those other assets as well. Remote or not location dependent companies are also really good options for having Bitcoin on their balance sheet, because as Bitcoin is this digital native asset that lives on the internet, you can easily move and transfer Bitcoin between different jurisdictions, and it's a very seamless process. Now, there are a few companies that I think are not appropriate for having Bitcoin on their balance sheet. This would be companies with expensive debt or high debt ratios to their cash equivalents. Because we're in this world of inflation and other assets, it might make sense to add Bitcoin to your balance sheet to offset some of that cash. But if you have high debt, you know, of course, what happens after inflation. Rates are generally raised, and if you have expensive debt to service, having an asset like Bitcoin on your balance sheet might not be helpful when in the immediate term, you're going to have to use cash to pay off those debts and interest. I also think Bitcoin is not appropriate for certain businesses that have very thin margins. And in particular, this might be a restaurant or a small family-owned business where maybe you're squeaking by with 10% margins. Having Bitcoin on your balance sheet is not that great because likely you're going to need cash for emergency expenditures and little things within your business, and you're just not going to have time to worry about managing different assets in your balance sheet when you need that cash at all times. So moving on from that, we'll talk a little bit about some of the risks or concerns, common ones that you might have about Bitcoin in general and adding it to your balance sheet. Now, the first question would be about tax implications. Here in Canada, businesses have different corporate tax rates depending on how much revenue that they make. And of course, when you buy and sell Bitcoin, that does count as some sort of revenue or income if it's a gain, or a loss if you're selling it at a loss. If you're in a different country, or maybe you're in a US state, this might be considered a little bit different. You might be able to add it to your balance sheet as a different type of intangible asset. But in Canada, there are different rules about this sort of thing, and I've linked an article down below and one that you can check out after you see this video if you're curious about that. But in general, my whole advice on this would be, if you're planning on buying Bitcoin and adding it to your balance sheet, you shouldn't worry about taxes for at least a few years because your time horizon should be 1 to 3 years minimum. Now, the second risk or question that you might have is Bitcoin's energy usage. Is it a big factor in global warming? Is it bad for the environment? Is it using too much energy? We're going to dive all into that here in just a second. But one of the most important things to know about Bitcoin is that there is a reason behind all of its energy consumption. Bitcoin basically scales to how many people are using the network, and that the more people that are using and transacting with Bitcoin, the more volume that it's handling and going through, the more mining capacity that's needed. And every few minutes, the Bitcoin network adjusts and requires more mining power to kind of protect the network if there's a surge in users or there's a decrease. Most of Bitcoin's energy usage is through renewable energy. Because Bitcoin is so cost intensive to do all of this mining, it doesn't make sense to use energy sources like fossil fuel or coal in the long run. There's a lot of places in China doing this that have access to cheap energy, but as Bitcoin becomes more competitive, you also have to have cheaper energy. And cheaper energy comes in the form of solar, geothermal, and hydroelectric, all renewable sources of energy that cost nearly nothing. With the excess computing power needed, the cost to just get into mining to protect the Bitcoin network is going to be so gigantic that if you're running network costs, the amount that you pay per kilowatt of energy is too high, you don't make any profit mining Bitcoin, and there's no point in doing so. And I'll share some statistics here so you can see the massive growth of renewable energy into Bitcoin, how a lot of these mining operations are now moving to Canada and the US and really cold places like Iceland and Siberia to get this cheap energy to run their mining processing plants more efficiently. In fact, for all that fear out there and all the articles about how Bitcoin's power usage is so detrimental to the environment, it could actually be a really positive force for pushing investment in more renewable energy. As the price of Bitcoin rises, more people are attracted to protect the network, and thus more people are given an incentive to invest in renewable energy power plants and things like that so that they can mine Bitcoin. You can go to other countries where previously they might have a waterfall but no other sort of industry. You can set up a Bitcoin mining plant, hook up to a Starlink in the internet, and all of a sudden you have a working economy. That's part of the magic of Bitcoin. And if you're worried about Bitcoin's energy usage and the efficacy of its mining, then you should be terrified by gold mining, where you're talking about, massive vehicles burning fossil fuels to excavate, hundreds of thousands of acres of land just to find a few nuggets in an exploration project. The amount of damage to the environment that gold mining causes, not to mention the cruelty of how gold is mined in some of these countries like South America, that should be an instant put off in using gold as any sort of store of value either. With all that in mind, Bitcoin mining will get better. Computers are becoming more efficient, more powerful with less energy usage, and we are moving gradually to more clean energy. About 75% of Bitcoin mining is done through a renewable energy of some sort, and I expect over the next few years that's going to move closer to 90 to 95%. So another concern that you might have about Bitcoin is the volatility. Yes, Bitcoin likes to do these dramatic moves, 10, 20% in a day, going up 1,000% in a year, dropping 50% in a bad year. And all this might make you think, why would I ever want to add anything this crazy to my balance sheet? Well, we'll get into that in a second, but one of the most important things to consider is that when it comes to all assets, let's just say, commodities or other stores of value, volatility is part of the game. If you're a lumber company, you're going to be accumulating tons and tons of wood over the long periods of time. You're going to be dealing with futures, and the price of lumber has moved 400% in a year. If you're dealing with oil, you have to worry about negative prices. Bitcoin is never going to be negative $20, but a barrel of oil totally can be through the use of futures. The point of adding Bitcoin to your balance sheet is that while it can be a really volatile asset, the track record is generally up. And that doesn't mean that it's going to be like that forever. But in this stage where it's at, with all of these companies adding it, with a broader adoption scheme of Bitcoin growing every single year, you don't need to own all of your assets in Bitcoin. You don't need to convert your entire balance sheet. You just need to convert 1 to 3%. Worst case scenario, crypto crashes. It shouldn't make a dent. But best case scenario, it's an asymmetric upside opportunity. So when you're purchasing Bitcoin and it goes up 5 times, maybe even 10 times, really optimistically, it'll become a really good hedge on your balance sheet and you can trim it where it's appropriate. Bitcoin has gone through plenty of drawdowns in the past and it's snapped back out of each and every one of them. This is a bit of a chart that represents what those have looked like in the past. And another way to look at it is that while some of these assets, adding them to your balance sheet might be a risk, cash is a certainty. in one way. And that certainty is that it will always lose purchasing power over the long run. We don't know if Bitcoin is going to be up or down in a year, but we do know that cash is going to buy you a lot less 10 years from now. If you look at governments around the world, they're just infamous for creating inflation and devaluing their dollar. They need to fund things like wars. They need to fund things like other initiatives. They want to do things that the tax dollars don't provide. There's been no such thing as a country in all of existence that has always operated on a balanced budget. And who pays the price? Cash, and people who don't have enough of assets basically to hedge out that inflation. So as a company, if your job is to protect your balance sheet, you're doing a bad job by holding cash for 1, 5, 10 years. You need to diversify into something. And if you believe in Bitcoin and you understand how it works and the growth and its trajectory, then it makes complete sense to take even just a tiny sliver of your balance sheet and start putting it in today. I would rather take the leap with an asset like Bitcoin than to just bleed to death with an asset like cash. It's as simple as that. Will governments ban Bitcoin? Now, I can't say any of these things with complete certainty, but I can look pragmatically at the facts of where Bitcoin and the industry and using it as a store of value on a balance sheet is right now. And I would say that companies like Tesla, MicroStrategy, and Square, they wouldn't consider putting millions and billions of dollars into this asset as really growing and leading companies in this space if they thought for any reason it might be banned or outlawed in any sort of way. And actually physically doing this, accomplishing the act of banning Bitcoin, is not as easy as you might think. Where else when it comes to gold, governments have historically gone and seized gold from people and said that you can't store it yourself, it needs to belong to the Federal Reserve. They can't do that with Bitcoin. Bitcoin runs very much like a torrent. In the same way that you can't stop piracy online, you can't stop the Bitcoin network from running. Unless you have 51% of the computing power, which is never going to happen by a single government, you can't stop people from owning Bitcoin in any way, shape, or form. If you're a corporation, yes, governments can come down, they can crack down if you have it on your balance sheet. That is always a potential possibility. But like I said, the industry is growing massively every single day. There are lobbyists coming to the forefront who are looking to protect Bitcoin and have more regulations around it. If you look at Joe Biden, the president of the US, one of his biggest donors was a 28-year-old named Sam Bankman-Fried, who was the creator of the FTX exchange, one of the largest cryptocurrency exchanges out there. So the lobbyists are making their way in the US and Washington, D.C. They're going to be making their way over to the parliament in Canada as well. And I feel very confident that in the long term, there's going to be very little incentive for the government to outright ban Bitcoin. They'll just make a few more regulations around it to protect investors and corporations. Now let's talk about custody. Now there's a lot of different ways to handle a Bitcoin. You can make an online wallet on a variety of different exchanges. You can write down your private key and your public key on a piece of paper, your username and password to own the Bitcoin. You can have a ledger, which is like a little device that stores your Bitcoin as well that you kind of need to type in a code to access. There's a multitude of ways to store your Bitcoin. They all have their ups and downs. But as a corporation, the thing that you're most concerned about is the protection of that asset. And if you're going to be purchasing something like Bitcoin, it's great to have something like insurance. So we'll dive into this a little bit here, but BitBuy is the first cryptocurrency exchange and broker in Canada to actually offer fully covered protection on your Bitcoin purchases, which means that you can buy Bitcoin, you can store it on BitBuy, and rest assured that it's fully protected. It's monitored and watched at all times, and it comes at no additional cost. So how the BitBuy and the Knox partnership works is basically any Bitcoin that you purchase through BitBuy is held in a cold offline wallet. And what that basically means is that the wallet, the place that the Bitcoin is stored on behalf of all of BitBuy's customers and corporate accounts, has no access to the internet. So there's no possibility of any foreign hackers getting in and moving the funds or anything like that. And of course, in the event of any sort of hack or any sort of access to those funds that are illegitimate, Knox 100% covers all of the Bitcoin holdings in those accounts. It's a very comprehensive insurance policy, similar to what you would find if you're with a broker like Questrade or TD Ameritrade that protects your assets in case of hack or theft or anything like that. Now, while having your Bitcoin on a centralized site might go against this sort of ethos of cryptocurrency, which is decentralize everything, not your keys, not your coin, With this insurance in place, you have that like-minded protection. And if you are a corporate treasurer of some sort, you can't deal with cold wallets and things like that on an ongoing basis. You want to have some sort of custodian that you can trust to hold your asset. And there's no other company in Canada, and probably not the US for that matter, that's going to insure those funds like Knox and BitBuy do. And it also means that when it comes to tax season or transparency for earnings and things like that, all of these things are managed through the BitBuy system. All of that data is transparent and accessible by multiple parties. If you're dealing with a joint partnership versus a sole proprietorship, it's a much better deal to have this on a centralized server or a centralized custodian where you can monitor the ebb and flow and the purchases and the buying and the selling of that asset rather than having it on a cold wallet that maybe only one or two people can possess the keys for. Now, a lot of questions that some people might have is how much should I buy? What type of allocation should I put in? The thing that's kind of crazy about this is that a lot of different companies have taken very different approaches to this. When it came to Tesla, I think they put around 7 to 10% of their balance sheet into Bitcoin, which is quite a bit, as you can imagine. When it came to a company like a MicroStrategy, they put their entire balance sheet into it. And I don't think these are fits for most companies. I think most companies want to have just a slice of the pie to offset some of the volatility, to offset some of the inflation that their just cash reserves or their cash equivalents might have. So I think an appropriate allocation is probably anywhere between 1 to 5%, but of course it depends on your conviction level. When it comes to any sort of investment, I would never go all in without spending tens or hundreds of hours studying what it is. And if you're a corporate treasurer, you might not have time. You might need to get the Cliff Notes version of what this asset is so that you can start taking advantage of its properties right away. So to do so, I would say 1 to 5% allocation for your corporate treasury. The worst case scenario, you lose 5% of your cash equivalents. You're going to lose that much purchasing power anyways through inflation in 1 year or so, so it's not that big of a deal. But in the event that it does go up, you can have the appreciation that's asymmetric, right? You can double it, you can triple it, you can quadruple it 5 times. Through these Bitcoin cycles, we've seen Bitcoin go from the lows about 10 times to the highs. In March of 2020, I think Bitcoin was around $3,000 US, and now it's around $40,000. So that's a 10 times appreciation. If you added it to your balance sheet back then, I don't need to do the math. So you can decide kind of what allocation you want to have in general, but I would say the more that you allocate, the more research you should definitely do before doing so. But if you want kind of an easy, hands-off way of doing it, I think 1 to 5% is probably the most appropriate. Now, the last question that you might have is, when do you buy Bitcoin? Now, as Warren Buffett might say, it's not about timing the market, it's about time in the market. When it comes to the corporations in the past that have bought Bitcoin for their treasury, they've usually done it in one follow swoop. They've kind of purchased it all at once and have made their allocation done and done. But there are other ways of doing it as well. You can purchase it on a monthly basis. You can purchase it at the end of each quarter. You can have daily or weekly recurring buys. You can kind of decide at your own pace how you want to add Bitcoin to your balance sheet. So the way that I would personally approach it is I think there's always a place for an initial allocation. Get off zero as soon as you can. But if you are a company that is producing cash flow and you have those cash reserves adding up every single quarter and you're consistent with that, then take a little bit of that. Take that same percentage of allocation in your quarterly earnings and put it into the Bitcoin at the end of every quarter as well. I don't think you can go wrong with that in the long term. All right, so we're gonna go through a little bit of a walkthrough here of the BitBuy platform, how to set up your own business account, and some of the features and benefits of using it so that you can get started to add Bitcoin to your balance sheet. So first, you're gonna wanna go to bitbuy.ca. They have been around since 2016. They're one of Canada's largest cryptocurrency exchanges, and they've actually recently redesigned their entire platform. It's looking fantastic. And when it comes to Bitcoin, you can make a personal account or you can do a corporate account, and they have simple accounts for just, buying, selling, depositing, withdrawing Bitcoin. And they have advanced things too if you want to get into trading. However, if you're in it for the long run as a corporation, you don't want to mess around with all the trading. Don't get yourself into the hassle that I've gone through myself as a Bitcoin and cryptocurrency trader. They also have large-scale concierge OTC services. So that means that if you're a large business, you're not just purchasing $1,000 of Bitcoin here and there, but you're dealing with the tens of thousands, hundreds of thousands, or even millions. BitBuy can help you with that as well. We'll dive in a little bit to see what their OTC service is. But essentially, they have around-the-clock OTC for clients looking to invest over $50,000 or more into Bitcoin. You can talk directly with a member from their team and get started with this. It's always good to have someone one-on-one where you might not have that accessibility if you're just using a regular cryptocurrency exchange. So why trade OTC? So when you're a business and you want to purchase Bitcoin, you can't just go on to Coinbase or whatever or BitBuy and just buy $1 million of Bitcoin. You're going to cause this big slippage as there might not be that much on the public ask. So what the OTC services do, the over-the-counter services, is they help you purchase your large amounts of Bitcoin without disrupting the ebb and flow of the market, to kind of do it more stealthily so that you can purchase your Bitcoin without letting everyone in the market know that there's a big buyer in town or a big seller in town. And so BitBuy, they've been doing this for quite a while now. They have about $500 million of OTC purchases completed. And they have the same outbound wire transfers to any bank in Canada, which is great for quick ins and outs if you want to get capital in on basically the same day. And they have competitive rates, so they're going to all sorts of different places and marketplaces to purchase this Bitcoin on your behalf. They have their own book, of course. But again, if you're looking to purchase large amounts, you have to do it through OTC if you want to do it well and get the best fills possible. So if you use the link below, you should come to a page like this that helps you start your personal account with BitBuy. Basically, you're going to have two options here, personal account or business account. You're going to want to switch to business account for these OTC and business purchases. And you'll make a email address here. You'll put your email, username, password, phone number, sign up, and verify all of these things. So once you're all signed up, they're going to ask you to set up a little security code. You'll have the options to set up two-factor authentication. And basically, you'll log into BitBuy as I have the screen here. You'll kind of enter your username and password. Make sure you're not a robot. Check the authentication, make sure you're all signed in, and then click sign in. So once you've set your account up, you're going to have to go through KYC verification. This is basically where they will take your phone number. They'll get some things like identity documents just to make sure that you're a real person. They can link all this stuff together. It's know your customer. It's commonplace now for signing up for any cryptocurrency like exchange. Once you've done all that, you'll also need to submit some of your corporate documents to get started as well in BitBuy. You're going to have things like your articles of incorporation. You're going to have a proof of address document, some sort of bill or a CRA document. You're going to need a shareholder register as well. So when you've incorporated your business and you've done any shareholder registry updates, you should have that. And then you'll also need a list of directors if applicable as well. And all the documents too, if they're bills that are, monthly or anything like that for proof of identity, you're going to want to make sure that they're as new as possible, no older than 3 months. The whole onboarding process with BitBuy takes around 5 days, but they will have an individual go in and verify the authenticity of all your documents. Once that's done, you'll be able to log into your BitBuy and start purchasing Bitcoin through the OTC exchange as soon as possible. Now, basically, how this will work is you will go and you'll log into your BitBuy dashboard. You'll see things like your Canadian dollars, your Bitcoin. Now, your Bitcoin is going to be the only asset on here insured by Knox, so that'll have the most protection. There are other assets as well. We can dive into that on another time, but basically I look at Bitcoin Cash, Ethereum, Litecoin as more speculative venture investments, maybe not appropriate for all balance sheets, but very different from just Bitcoin, which is kind of the de facto store value of all of these cryptocurrencies. Up at the top, you'll be able to do things like express trade or pro trade. If you're comfortable just purchasing your own Bitcoin, you're doing it in smaller amounts, you can use express trade features. Bitcoin has a kind of a fee model that I'll link somewhere on the screen here so you can see what their fees are, but they are among some of the lowest in Canada when it comes to different exchanges and operations. If you're OTC, of course, you can speak to any one of BitBuy's representatives. They'll be happy to help you with your purchases. You just tell them how much you want to get, figure out how to get the amount into the system, and then they will stagger out those buys and get as much as possible through you, and they'll work you through that process so that you can do it in the future as well. BitBuy has a really good support system as well. If you are ever confused about how any of these things work, they have, little guides about Bitcoin, how to sign in, all of these things. And at any point of time, if you need to talk to a real human being, they do have customer support for these businesses and other accounts. And even if you're just a smaller business, you can get in touch with a real human as well, which is great considering all of these exchanges try to just pawn you off onto their guide sections, and then they don't really have a way of communicating directly with support staff. BitBuy is great in this regard. They're really personalized, and that's a great feature to have when you're trusting them with your corporation and a large amount of money. BitBuy has also made some really good documents teaching people about adding Bitcoin to their corporation and kind of the future and the history of Bitcoin. I've linked to a ton of those down below. They're really great articles if you want to just learn more about Bitcoin and know that the custodian and the company that you're kind of entrusting these purchases with is really active in the community and really understands this space as a whole. BitBuy is really uniquely positioned as a Canadian corporation, and they're really trying to focus on helping onboard the next wave of Canadian corporations into Bitcoin and getting it onto their balance sheets. So they have a lot of experts in this space that have worked with large clients before. They have a focus now really with these business accounts of helping you understand the implications, helping you with things like tax info, making sure that insurance is there for the custody, and helping you get the best fills and purchases through the OTC buying services that they have, which are kind of one-on-one broker dealers. Whether you're, again, a multi-conglomerate company or you're just a mom and pop business, they have experience working with all size and scopes of businesses to make sure that you can get your Bitcoin safe and sound and secure. They've also helped a lot of corporations with some of their treasury policies as well. They have advisors that can help with proposing treasury policy changes to reporting and record keeping. And while Bitcoin and cryptocurrencies are these kind of new emerging asset classes, the corporate treasuries still need to be prudent and deliberate in their approach to purchasing these assets. And so while it might seem like a daunting process, BitBuy is really uniquely and well positioned to help out with any sort of corporation in doing so. And again, I don't take sponsorships super lightly. I've been offered all sorts of, shitcoin this, Shiba, whatever crap this to shout out on my channel or make videos of. And I don't take them because I have to do an enormous amount of vetting to make sure that whatever I'm putting my name behind, I really trust and believe in as well. And when it came to BitBuy, they approached me, a few months ago, and I did a lot of investigation about them, to make sure their service had really good uptime and all of these things, and they had a really good staff, and I spoke with them directly. So rest assured, if you followed this channel in the past, they have my full-hearted endorsement. It's not just because they're sponsoring this video, but it's because I really believe in what they're doing, and I'm actually going to be using BitBuy myself to purchase my Bitcoin and insure it for my personal business, Kinetic Cuts, in the future. So all that being said, there's a lot to take into consideration when adding Bitcoin to your balance sheet, but I hope I've kind of cleared up the general questions you might have about doing so. And of course, if you have any more, feel free to comment down below or feel free to message me on Twitter or anything like that. And of course, BitBuy is fantastic at answering these questions as well. So if you sign up for their service, you get your business going on there. They'll help you verify your account. They'll help you get your documents all submitted. And any questions you might have about treasury policy, about what sort of allocation you might make into Bitcoin, they're happy to answer that stuff as well. They probably know actually a lot more about that than I do. But again, I'm just here to kind of make that process a little bit easier, answer the common questions, and hopefully get you and your business set up on the road to adding Bitcoin to your balance sheet and prospering and hedging against inflation and all that other stuff. And if you made it all the way to the end here, we're going to do a special giveaway of $500. Now, I want to really give this away to a small business or corporation so they can make their leap into Bitcoin and kind of understand what that is. I think the easiest way to kind of get into Bitcoin and really understand it is to have some in your hand. You're a lot more incentivized to learn about it once you have just a little bit. You got to have some skin in the game. You can spend all kind of, days and weeks learning about it, but it isn't until you actually own some where you're really compelled to dive deep into what Bitcoin is and what it really means for society in general. So if you know any sort of small business or maybe you have one yourself, just comment down below their story, maybe give me their contact info, or if it's a public company, I'll kind of find it out on my own. And at the end of June, we're going to pick one lucky winner to get $500 in Bitcoin once they sign up for their BitBuy account. We'll send it directly to them, no strings attached. All you have to do is comment them down below. We'll make sure that we can get in touch with them one way or another if they're selected, and they'll get their Bitcoin and they'll already have some on their balance sheet. Maybe it'll be 0.00001% if it's a massive company, but maybe that $500 will be a good little starting allocation, and you can build on it from there. And if you haven't already, subscribe to the Kinetic Finance channel down below because we make videos like this almost every single week covering all sorts of finance topics. We're here every single day, or I'm here every single day to answer people's questions and comments and videos about all these topics. And we're building a great community here where we can learn and prosper together in this emerging new world of finance and new financial products. So again, thanks so much for watching. Take care, and I'll see you in the next one.